Good day, my dear students. Through this class, I would like to make you know regarding the banking system of our country, or say banking transactions. My major intention through this class is to make you aware of the importance or need of the banks, its origin, the meaning of the banks, that is in the sense what kind of financial institutions are to be called banks, what may be the features or characteristics of the banks, what all kinds of the functions that the banks do, what kind of services the banks offer to its customers, and the relationship between the banks and the customers, the kinds of banks, the types of bank accounts, and the uses of the bank account, or the profits or advantages of opening a bank account. Say, the word bank is an homonym, gives different kinds of meaning. Say, in one sense, bank is a place where something is stored, you can say. A place where some goods are stored, where goods are stored. In another sense, bank is the sides of the river. The sides, two sides of the river, maybe a right bank of the river or a left bank of the river. Say, in that sense, the bank gives you quite a different meanings, but in this particular session, you need to know that the particular meaning where the goods are stored, in the sense regarding the banking transactions, in the sense the bank is such a kind of place where monetary transactions take place, where the acceptance of the money and lending of the money takes place. You must have heard the banks called blood bank, eye bank, bone bank. But the bank, what I am dealing with at present is the monetary banks or financial banks. So that too, what kind of all the activities or the services or functions that are taking place through a particular financial institution called bank. So all the activities are the services that are carried out by a financial institution called bank is called banking. Say, the banks in India have been developed since 200 years. The banks are playing a very vital role in the development of the country. The economy of the country is quite depending on the development of its banks. Along with the banks, there are so many other financial institutions, maybe LIC, Unit Trust of India, UTI, and so many other financial institutions or organizations. But the banks, what our attention is going to be confined is such a place where the money of the customers who have surplus money with them, that in the sense, the people whose income is more than their expenses, usually they will have a comfortable life and they think to save the money, and by the way they wish to increase the value of their money. Hence they try to invest that money on any property, or they invest or deposit the money in the banks so that it goes on earning the income in the form of the interest. So the banks collect the money or mobilize the money from such kind of customers, and there will be other kind of customers who are in need of the money. The other kind of customers whose expenses are more than their income, they may require the money. That is why they get the money from the banks in the form of the loans. So the banks advance or lend the money to such kind of customers on the particular guarantees or on the assurance of particular assets. So in this way, the banks collect the money from the customers called depositors, and they lend the money to the other customers who can be called as the loanees. Say, don't misunderstand that there will be the complete difference between the depositors and the loaners. Means depositors are different and loanees are different. Loaner is the person one who lends the loan. Loanee is a person one who receives the loans. A person can be a depositor as well as he can be a loanee. In the sense, on some occasions, he may invest or he may deposit the money which he has in excess in the banks. But on other circumstances, he may require more money than his deposits or than his investments. So he may require the money from the banks, so he can become a loanee. He can get the loans from the banks. Since such kind of activities, collection of the money and lending of the loans is the major activity of the bank. Say, the banker or the banks do not provide this service, or they cannot even survive by paying more to the depositor and less to the loanees. The interest what the banks give to the depositor will be quite lower than the interest what the banks impose on the loans. The difference in interest between the deposits and the loans, the difference in interest on deposits and loans. The interest on deposits by the banks will be less, and the interest on the loans by the banks will be more, so that banks earn a kind of profit. So on this profit, the banks meet their banking business or the banking expenses or maintenance of the bank. The maintenance of the banks involve paying of the salaries of its employees and purchasing of the buildings or building the buildings for the banks, or hiring the buildings for carrying out the bank activities, and even depositing some amount of the bank in the form of deposits at RPI, so which we may regard as repo rates. Say, for these kind of expenses, the banks meet all their requirements through this particular profit earned by the banks through the difference between the interest levied or interest put on the deposits and the interest levied on the loans. Since the banks go on working on the profit orientation, they work on the profit. So the financial condition of the banks go on increasing. In case if the banks go on working properly without any scandals, scams, or any kind of financial malpractices. Okay, this is one aspect. Then let us just see the word bank. The word bank has been derived from, either it must have been derived from an Italian word called banco, or it must have been derived from a French word called banquier. The meaning of both these words in English is money exchange table. Money exchange table. That makes sense? The place where the money is exchanged, either maybe accepting the money or giving the money. So the banking includes many other activities. That makes sense? The banks may, either the major activities of the banks are either collecting the money from the public or lending the money to the public. In addition with this, the banks provide many other services, or they carry out many other works. All the activities what the bank do is called banking. Banking. It includes, it is a word which includes many more activities that are carried out in the bank. What may be the features of the bank? or the characteristics of the bank. The major characteristics of the bank are every bank will be having its identity in the form of name. Say, the banks will be recognized with a particular name: State Bank of India, Corporation Bank, Canara Bank, Syndicate Bank, Karnataka Gramina Vikas Bank, say KVGB. Say like that, there are so many. Of course, in that way, the banks are recognized with a particular names. The banks accept the deposits. They accept the deposits from the public, and the banks deal with money. The banks deal with money. They are the financial institutions. The banks may be an individual, or it may be a firm, or it may be a company. In the sense, a bank may be a person, one who does this activity of collecting the money, or giving the money, or lending the money, who is licensed. I come to the definition of the bank a bit later. See, it can be a firm, it can be an organization, or it can be a particular company. The banks collect the deposits, lends the loans. The banks make payments and allows the public to withdraw the money. And they provide so many utility services, public utility services. Any person can ask the bank or direct the bank to pay the bill of electricity, to pay the bill of water, or to pay the bill of any other utilities, or even any kind of property tax or anything else can be asked to the bank to pay the concerned amount, or there is the particular amount to pay for particular department or institution. The banks work on profit and service orientation. They provide the banks work on profit, as well as their major motto is rendering the financial service to the public. The banks work will be always go on increasing. Earlier, the bank's work was mainly of collecting the money and lending the loans. But nowadays, the bank's works have been increased in many other fields too. They are working like a link between the customers, like they are the links between the bankers and the customers. They carry out the banking business, that is, mobilizing the deposit and lending of the advances or loans. So, with these features, of course, the banks will be having these particular characteristics. The major functions of the bank, the functions of the banks can be summarized under a few headings, like say acceptance of the deposits and lending of the loans. The functions of bank can be summarized under these heads. They acceptance of deposits and lending of loans. what you can think. Both are quite similar. Functions or services. Services offered by banks. Offered by banks can be summarized under these particular headings as acceptance of deposits and lending of loans, and transferring the money from one place to another place. Remittance, we can say. Remittance. The money can be transferred. Transfer of money. Transfer of money from one place to another place. Money can be transferred by directing any bank. Suppose if you are having money in your account at Dharwad, this money can be transferred to any other place. Having any account at any particular place, maybe it may be at whatever distance. Then the banks, of course, they lend the money on the direction by the public. They issue the money in cash on the direction called checks and DDs, collecting and lending of money. Collecting and lending of money on checks or say DDs, demand drafts, or any other bills. Say check is a written direction made to a bank asking it to pay the money to particular institution or to particular individual, etc. Similarly, DDs. And discounting of the bills. Discounting of the bills. Discounting of bills. Any bills can be discounted by the banks on the direction of the account holder or on the direction of the customer. And providing safe deposit lockers. The banks provide safe deposit lockers. Provide safe deposit lockers to its customers. Conducting foreign exchange transactions. The banks also do or they make foreign exchange. Conduct foreign exchange transactions. In a sense, money of any countries, money of any country or currency of any country can be exchanged to the value of the currency of any other country, the foreign exchange. Conducting government transactions. The banks conduct the foreign, of course, so these government transactions. Making government transactions or conducting government transactions. Making government transactions. In the sense, any government amount or facility, financial facility or help can be made by the bank to any beneficiary or to any customer. So these are all the functions of the banks. Say, acceptance of the deposits and lending of the loans, remittance, that means transferring the money from one place to another place, collecting and lending of money on the direction of the checks, DDs and other bills, discounting of the bills, paying of the bills on the direction of the customers, providing safe deposit lockers for any valuable assets, and conduct of foreign exchange transactions and making government transactions. See, these are the major functions or the services provided by the banks. So the relationship between the bankers and the customers are of two types. One is general relationship and the special relationship. The special relationship and general relationship are the two types of relationships that the banker and the customers have. This relationship can be, of course, the general relationship can be a primary relationship like the relationship between the debtor and the creditor, and the subsidiary. Of course, the general relationship may be a relationship between a trustee and beneficiary, and it can be a relationship between the agent and the principal. And the special relationship between the banker and the customer is the banks are having obligation to honor the checks, DDs or any kind of pay-in slips, and they are also having the obligation to maintain the secrecy of the accounts of its bank holders. So in this way, the bank, of course, the relationship between the banker and the customer can be known. Say, in India, all these financial institutions, in our country, all the financial institutions are being controlled by RBI, Reserve Bank of India. Reserve Bank of India, which is the bank of all banks or bankers bank, or it can be known as a Central Bank of India. It controls or supervises all the financial institutions in our country. Say in India, we have a network of about 20 nationalized banks. We have a network of 20 nationalized banks. The nationalized banks are such kind of banks whose ownership has been completely taken over by the central government. And we have 21 private banks and 19 foreign banks. With this network of banks, many financial transactions are carried out. Of course, in India, there are about 8,000 bank branches. Bank branches, of course, branches, all branches, about 8,000 branches of the banks we have across the country. And recently, the post office, the postal department, which was running the post office, due to the revolution in the field of communication, after the much usage of the cell phones or these mobile phones, the responsibility of the post office has much decreased. So the post offices which were quite popular in post-independence days up to 1990s or even up to the first decade of the 21st century, now they have taken a back sheet in disseminating the messages or information. So now they have been assigned the duty of carrying out the banks. In the sense, the post offices are also undertaking the work of banking. So the Postal Bank of India has been established, which is providing the banking services to the public. Say the Postal Bank of India providing what all the services are available in the banks to the public in India. So we have number of different kinds of banks in India. On the nature of the activities carried out in the banks or the objective or the purposes for which the banks have been established, the banks can be classified or divided into different categories. We have so many commercial banks. The types of banks are the commercial banks, industrial banks, or they may be called industrial development banks, land development banks. There are so many cooperative banks which work on the principle of cooperation, and there are so many indigenous banks, the money lenders or any individual who undertakes the activity of mobilizing the money or lending the money. Say, all these banks, in addition with these other financial institutions, maybe financial companies, LIC, Unit Trust of India, mutual funds companies, and so many other financial institutions, all are controlled and supervised by Reserve Bank of India. Say the banks, what type of accounts can be opened, or what are the different types of the accounts can be opened in a bank. Let us just concentrate on that aspect. Types of accounts. Types of accounts. There are 4 kinds of accounts one can open. One can open any one kind of the account or all kinds of the accounts. The 4 kinds of accounts are: one is savings bank account, savings bank account, which is usually called SB account, savings bank account, the current bank account, the second one, current bank account, which is called CD or CD account, current deposit accounts, and recurring deposit account. Recurring deposit account, which is called RDs, recurring deposit account. And the fourth one is called fixed or term deposit accounts, which is popularly called FD or FD accounts. These are the four kinds of the accounts one can open, or any one type of account can be opened by an individual. See, what are these? Let us know in brief about these. Savings bank account. It can be opened by any individual who wants to save the money. He can open a saving bank account, and through this account, number of times money can be deposited or withdrawn from the account. Any individual can deposit or withdraw the money on any number of times in a day. Usually this kind of account is opened with the purpose of saving the money. And the current deposit account is opened by the commercial bank, or usually the people, those who make huge transactions. The people who usually make huge transactions, they open such kind of accounts. They can deposit the money as well as withdraw the money as many times as possible. But usually the banks do not pay the interest for the amount deposited in the particular current account. Rather, they put service charges on this, because the traders or the commercial people, they can deposit or withdraw the money as many times as possible, that too in large amount. There is no restriction as far as the number of transactions in a day is concerned. And a recurrent deposit account is such a kind of account in which the money can be deposited in the bank with the intention of using it for any particular purpose. Say, in a particular frequency of the time or periodically money is deposited. Say, money can be deposited on the basis of on weekly basis or on the monthly basis. Say, the money which is saved by the public can be deposited in the bank to be used in the future. Say, on the certain occasions like marriage of the children, or for the education of the children, or for purchasing the property, etc. So for that particular purpose, the money is saved periodically, and the money which is deposited in this account goes on earning the interest. But the money cannot be withdrawn before the stipulated period. And the fixed deposit account or the term deposit account is such type of account. The money which is saved, any sum of amount can be deposited, or this account can be opened, FD account can be opened by depositing any fixed amount in the bank for a period of 1 month, 6 months, or say 1 year, say 5 years, or maybe for even 10 years. That is the sense. which is deposited for a particular definite period and which cannot be withdrawn from the bank is possible through a type of account called fixed deposit account or term deposit account. Say the term deposit account goes on earning a handsome interest. Say the interest varies on the tenure. The interest on the fixed deposit goes on increasing on the longer term. Say the interest on the fixed deposits for the period of 1 year will be lower than the interest put on the deposits which have been deposited for the period of 5 years. The deposits for longer term are more interest than the deposits made for short terms. So that is what a fixed deposit account. And through the of course in the fixed deposit account, the money cannot be withdrawn before the expiry of the accepted term or stipulated period. After the maturity of the date, after the expiry of that particular term, the money can be withdrawn from the bank. So these are what the 4 kinds of accounts that one can open in a bank. See, what are the steps to be followed, or what is the procedure that one has to follow in opening the bank account? So it is quite a simple and common thing to be known. Each one of us has to know how to open a bank account. There are very simple procedure in opening a bank account. First of all, one has to decide. The first step is one has to decide what kind of account you are going to open. Whether you are going to open SB, CD, RD or FD. After having decided, you need to approach the bank. You need to visit the bank. That means you have to go to the bank and meet the banker. Say any person or employee in the bank, or worker who is working, maybe a manager or any clerk. Then you have to fill the particular form, application form to open a bank account, and then give reference for opening a bank account. You have to give reference in opening a bank account. Giving reference in the sense, any person who is already having the bank account there, he has to refer you to the bank. Means he has to introduce you to the bank so that the banker becomes familiar with you and he allows you to open a bank account. After having filled the application form, having given your details, you have to submit that application form to the banker. Then a concerned officer, he the concerned officer verifies the application and he clears your application, and once the application is approved, after having verified, you are allowed to open a bank account, and the initial deposit, some amount has to be put in your account as the initial deposit. And what are the uses of the bank account? The uses of the bank account are, you have to, once you open a bank account, you are facilitated to have the safe custody for your money, and the opening a bank account helps you in making payments. Opening a bank account helps you in collection of money, and a bank account holder can easily get loans, and the bank account holder can make smooth financial transactions, and a bank account holder can get safe deposit lockers. So these are what are the uses in opening a bank account. Hence, each one of us have to have a bank accounts, so that whatever the transactions, the financial transactions are needed, they can be made through the bank. Nowadays, we have e-banking. The e-banking is a facility given by the bank. Without handling the physical money, you can transact, means you can make your dealings. Say you can purchase the things in the shops, and the payment can be made through the credit or debit cards, and the comfortable life is possible. So this is what we have learned through this class regarding the banking transactions. Thank you.